Okay. Are we good? Ready to go? Good morning. Please stand up. Up. You too. Up. Everyone up, please. Okay, shake it up. Just shake it up a bit. There, come on, there. That's it. Shake it up. Come on. Okay, good. Okay, good. That's what I like. Okay, sit down. There's nothing worse than talking to somebody on allegedly a Monday morning, which is now Tuesday, and finding out that they're still half asleep. So please, housekeeping, make sure I get your business card so that I can give you a draw. And I want you to know, first of all, that this is part of a series of seminars that I'm giving to your competitors as well. And they are receiving it with mixed results. But nevertheless, I haven't really changed it that much. So we're going to be here for 4.5 hours. Okay. Is that okay with everyone? Okay, good. And anybody who wants to come in, pipe in, and no matter halfway through the presentation is more than welcome to do that. So, what a year. I heard you guys had a great month. Is that right? Did you guys have a great month?
Absolutely.
You had a great month in January, eh? Well, that is wonderful. That is great news. You know why it's great news? Because nothing happens unless something is sold. And we all know that, don't we? So what we're going to be talking about today, good morning or good afternoon, just depending on how you look at things. I was looking for a document which is conveniently away, but that's okay. I wanted to talk to you this morning. Basically, the title is Insurance Problems or Opportunities. But for all of you, and most of you know who I am, but if you don't, my name's Ron Gillis, and I've been selling insurance in Etobicoke since 1982. Can you hear me there online? Just wave your hand up, okay? Put a hand up. Okay, that's good. So today we're going to be talking about insurance problems and opportunities. And I'm Ron Gillis, and I've been selling insurance in Etobicoke since 1982. So I think I have a little experience, though every day I see myself as learning something new. We recently relocated our office to 812 Browns Line, which is just a block south of Evans Avenue on the west side. So I don't know. I look in the newspaper, and your business is amazing. Like, it scares me. Here's a guy who bought a condo, and this isn't the Globe and Mail, and maybe I shouldn't be even reading the Globe and Mail, but I always do because I like to know what's going on in the morning before my clients do. And this guy walked away from a deposit of $439,000. Think about that. Has anybody bothered to call him up?
No.
Well, there's an opportunity there for you. Oh, what's this? First-time buyers find the going hard. Worse. It gets worse. Toronto area condo sellers brace for fresh supply. You're kidding me. All right. We're bringing more product onto the market. We can't sell what we've got. I don't know how you guys get through the day. Oh, you'll love this one. Hospitals are getting into the real estate business. Go figure. Hospitals are getting into the real estate business. I'll tell you a unique thing that I came across recently, and a lot of it has to do with high net worth individuals. This client turned around and bought a house, and he donated the house to the hospital so the hospital could convert it to a home for parents that were coming for sick children, kind of like Ronald McDonald House, same idea. Brilliant strategy, huge tax. I don't know what else they did for him. It was about $500,000. But it was an old property that he didn't want to reno, but he saw a golden opportunity to get in with this particular group. So I don't know if that's it, but according to this article, they're also getting into some form of social housing too. Affordable housing, not social housing. Oh, and here's the best one. The country or the province that's had nothing but floods and wildfires. Can anybody tell me which one that is? British Columbia, right. So, new Canadian homes will be built in areas of high risk of flooding and wildfires. Like, is that about borderline stupid or what? You have to digest this stuff in the morning. I mean, I don't know how you do it. Anyways, I wanted to share with you in conjunction with what's going on in the insurance business, some things that have worked for me over the years, and some of the things that I'm involved with. And I'm not tooting my horn, but I think it's really important to get in front of high net worth individuals constantly. You have to be there. You have to be there for them. So here's some of the things that I'm doing right now, and that have worked for me, and hopefully you can take some of this away and maybe apply it in your own practice. So currently I'm the president of Central Tennis Club, which is just down the street, and I've got 350 adults and 140 juniors. So it's a big membership. And I've been on and off the executive since the 90s, and so it's a long time. I have reaped all kinds of business from there. Long-term friendships, clients, opportunities. It's amazing. I'm also a member of 2 other tennis clubs. I guess why? But they have not yielded me the same results, but I'm still getting them. But why? I'm in front of high net worth people. I'm sorry, there's an old adage that says, poor clients are of little value to anybody. That's not to be arrogant. It's just simply a fact of life that you need to have high net worth people in order to make your business grow. I'm a volunteer with Tennis Canada at their annual tournament, and I'm working towards my 20-year plaque recognition. I also work with the Ontario Tennis Association and the Community Outreach Program. When I say work, volunteer, I'm just using that as a thing. I'm currently the treasurer of Lakeshore Lions Club, and as many of you know who have been in the area for a long time, we built the arena down at 400 Kipling Avenue. I'm the treasurer of the Canadian Hispanic Congress, which is a nonprofit organization serving the needs of Latin American community in Canada. I'm involved with the federal and provincial Conservative Party, and I'm also involved in the Celtic Studies program at the University of Toronto. I currently run a co-ed program with a couple of other realtors for children grades 5 to 8, teaching them volleyball and basketball. Again, that doesn't put me in front of high net worth people, it puts me in front of people. Okay, important, rather than sitting at home and scrolling on the phone. Obviously, I love tennis year round. I play, I cycle, I hike, and evidently I don't travel enough, so I've been told. One thing that I have found that works for me well is the cycling. I get involved with St. Joseph's Hospital in their fundraising efforts. So every year I cycle with a group of doctors, and I mean a big group of doctors, okay? And we go in, and in one day we raise $500,000. So any of you who have had the misfortune of being down at St. Joseph's Hospital recently, the emergency room was renovated from a ride that we did 2 years ago. Again, if you want to meet the people, you got to play their game, right? And this is not advertised open to the public. I just got in there, and I was lucky. So the message, the takeaway in all this, of course, is if you want to succeed today, you've got to get involved. So I see you guys as wealth creators, and you're a gifted group, and you make Canadians fulfill their dreams and help create legacies. And legacies is really important. Has anybody been in the business long enough to remember the phrase, "Oh, I don't do rentals"? I know that's funny, right? I know that's funny. But at one time, of course, I met many agents who said, "Oh, I don't do rentals." Okay, well, what kind of world are we living in today? The world is changing. The type of housing available is changing. So you've got to get that phrase out of your mind because, as I said, out of chaos are opportunities. Right now we've got political turmoil, low interest rates, climate change, and the largest intergenerational transfer of wealth in the history of this country is happening right now. Right here, as we sit here this morning. And as I told you before, and you'll hear me say again, nothing happens until something is sold. A recent report, and I want to share this with you because this is really good, came from the Chubb Insurance Company of North America. They're one of the largest insurance companies in the world. And every year they do a survey of high net worth individuals. This year's survey for 2024, so this intel as of December 31st, as follows. They categorize people with assets of $5 million, $10 million, $25 million above. Okay, so that's That's where they're thinking in terms of insurance. Very hard to sell in that market? No, it's very easy once you get to be one of their trusted advisors. 61% of the people surveyed, and this was a large statistical sample, 61% of these individuals with assets in excess, the minimum being $5 million, do not see themselves as being wealthy. Go figure that. They don't see themselves as being wealthy at all. They see themselves as just being average. So what is the new wealth paradigm? The question posed to the following demographic groups: do you plan to retire? So listen to this breakdown, because I think I found this fascinating. So of that respondents, and again, high net worth people, the Gen Z, and that's those people 28 and under, 50% said, I would prefer to never retire. The millennials, and we're all working with millennials right now, and that's between 28 and 43, 57% said, I would prefer to never retire. The Gen X, from 44 to 59 age group, 63% said, I prefer never to retire. Boomers, 1, and Boomers, 2. So Boomers, 2 is that category 60 to 69. 61% said, I would prefer not to retire. Boomers, number 1, 70 to 78, 34% said, I would prefer never to retire. And then we've got the silent generation, which is age 79 to 100. 18% of these people said, I would prefer never to retire. So what is that? These are opportunities. These are amazing opportunities if you get into their mind and understand how they think. So important. Traditional housing is being turned on its head, as we all know. New materials, types of housing, varied occupancies. So I want to share you some insights. So I've got a lot of stuff, but I'm going to focus on about 3 or 4 things this morning, just so that it helps your business a bit. So what's new in Airbnbs? Well, everybody knows you now have to have a license, okay, to have an Airbnb. And you become the most unpopular person on the street once you put in an Airbnb. We categorize in insurance terms 2 types of occupancy. One where it's owner occupied and they've got either a garden suite, or they've got rooms in their homes, or a basement or whatever, and it's registered with Airbnb. Where the owner occupies and rents out on a short-term basis, rooms or suites, okay? That's what we look at. This is more palatable for insurance companies. Why? Because the owner is there. They got hands-on management. Really, really important. And it's easier for us to insure and less expensive. The problem that a lot of them have is that today everything is available. Everything is available. If you have a dirty Airbnb, everybody and their uncle knows before the guy's checked out. That's terrible. This social media is awful. It's awful. The second category, which is more difficult, and this is where we have an absentee owner or a Airbnb operator who is kind of sloppy. When I mean sloppy, they just don't do their job. Damages from this typical Airbnb operator suffers from damages from parties by youth, or a transient population just passing through, to new arrivals who are coming to Canada. Hey, you know what happens when your customers come in? Where do they stay? They can't stay in a hotel. Nobody's got the money for that. Yeah. Okay, it's hard to get accommodation if you come here to Toronto, right? And so this makes it very less, because a high turnover, great for your investor client, lots of dough, $80,000 a year is not uncommon for an Airbnb. But they got all kinds of problems. They got more problems. There was an Airbnb case recently down in Liberty Village. So a young guy comes in, gets online, everything else. He's checked out, good. He comes in, has orders in, has a nice meal, then proceeds to walk up to the top of the roof and throw himself over. I'm just telling you. Airbnb, it tracks all kinds of things. Of course, we have to deal with that in an insurance basis, because somebody is going to sue that Airbnb owner. Wouldn't you if you lost your kid? I mean, of course you would. Or your best friend or your spouse or whoever. No matter how unstable they were at the time. The takeaway here is we look at projected revenue along with volume of activity when we're insuring these things. And certainly don't discourage your clients from doing it. But to give you the idea of backlash, take Prince Edward County. They have gone right 180 degrees the other way. You can't get any more licenses out there. Impossible, almost impossible to get a license. And they're charging. They're making money off. The municipalities are making money off it. And they're charging you more for taxes too. Another thing we talked about with this other group that I was presenting to was student housing. So a lot of people, if you have any clients that are investor clients and they're looking to do student housing because they see that as a golden opportunity, it can be. But it only works in places where there are large student populations. So that would be London, Peterborough, Lakefield. Even down here on the waterfront, we've got a number of student housing facilities. And typically they're characterized by residents, maybe six, 7 kids, okay? 6 or 7. A good takeaway for this, of course, is that a lot of times, you know, when you have a unit owner and they say, I'm not renting until I have insurance. Well, if the kids are coming from their parents' home, we have a product which extends coverage so that your students don't have to go and buy insurance, separate insurance. It's very good to know. It's one less bill that the parent has to, and the takeaway on that, of course, is that, you know, assuming all the parents have insurance, this would be a great thing for you guys to say, hey, don't worry about your kid. He's going to probably be covered anyways. Check with your broker to make sure, because not every policy has that. The coverage that you get is not as broad as a standard homeowner's policy. So in your standard homeowner's policy, typically we give you coverage for your dwelling, additional living expenses, detached structures, etc. In a student housing scenario, we're giving you bare bones. Okay, if the place burns, yes, we're going to rebuild to a point. We're also going to protect you to a point, but the coverage is not anything near to what you have. Typical of these risks, of course, is they have shared kitchens and bathrooms, constant plumbing issues, and high turnover. My recommendation to you guys, of course, is to make sure that you put under lease that everybody has insurance. Just put it under lease, protect yourself, protect your investor client. And most people understand that today. There was a time everybody walked away from that stuff. Said, oh, an extra expense, I don't want to do it. Now it's very popular, and it's almost mandatory when you're going forward with your client, because it's their insurance that is insisting that the tenants carry insurance as well. One of the things also you should be aware of is these policies carry hot plate warranties. Does anybody know what that is? Hot plate warranty is that we will pay a claim if there's a fire, but we won't pay a claim if it's been caused by a hot plate in the room. So, you know, we've always got that one nerdy kid who sits to the side, you know, and won't come out and socialize in the university setting. You know, they won't do that. That kid is probably the one that's going to bring his own hot plate in there. Of course, it voids the policy. Always make sure that your clients understand that too. The rigor, of course, like anything else, fire extinguishers, smoke detectors, and carbon monoxide detectors are mandatory. A new thing now when talking to your clients who want to convert a home to a student rental is using the new collapsible windows in the basement. So down here, this stuff is totally useless if there's a fire down here, okay? But the new ones, you push out. You can't get in, but you can push out. And those are the ones that they meet the fire code, and they're very, very good to have. They're not as pretty, but they're barred, so they do keep people from coming in, but it allows you easy access, because a lot of these buildings do not have an egress, right? They don't. They just don't have that. Another problem with them, of course, is that summer vacancies always create a vacancy situation. So you're being faced today with having your clients pay, if they're a tenant, if you're getting a student occupancy for your client, they have to pay almost for year round. don't let them get into that cycle of I'm only going to May. You know, the owners today want to have revenue right through the term. They don't want to be with the high turnover, because the high turnover creates more problems. Like I said before, plumbing, kids who have never cooked before, real challenge. I want to talk also a bit about rented dwellings. Now, my feeling is, and it's not always easy to get this, but you should make your rented dwellings on a standalone basis. So if you're selling a client, the client's now got a legacy from that intergenerational wealth transfer. It's now got a legacy of $250,000. So you've got a bungalow you want to rent him to, rent out so that he can make some money, okay? He says, I get a deal. I get a deal if I put them together. Yes, you get a deal. You get a deal. 10%. Woo, big deal. 10%. That's chump change. But if you get a fire or you get a number of claims off that rented dwelling, you may find that your entire insurance gets canceled. So they won't cancel you on a standalone basis. So always try and say, listen, you know, get separate insurance. Don't put it, oh, but I get a break on my car insurance. Forget that. It's proper management. You get a deduction anyways for that. And if there ever is a problem with the insurance, with your client, and I'll give you an exact, this is a true case that happened. We had a case where there was a fire and they were being canceled. And all of a sudden they decided to look at the owner property. Okay, so what's that mean? Well, currently he was under renovations, but he never bothered to tell anybody. Well, of course, we're going to cancel you because it's material change of risk. So he has to go out and try and find a house that's had an insurance policy, that's had a fire, and is currently under construction. Call a broker anytime. Ask him how much time he's going to spend on this one. They're just not going to. I wanted to also make sure that if your clients do decide to rent part of their house out, that's called material change in risk as well, okay? Typically, we'll charge more money. In the perfect world, we like to see a separate entrance. Why? Because if we have crazy tenant who decides one day to go ballistic, and this is a true story, we had a case down on Mississauga. I was there the night the police came. Because my client called me, this guy went ballistic on everybody. Just went crazy, smashing stuff, everything. They took him away in the cruiser. If you have that, you can jeopardize your client and their family's life. You know, some people don't want to put in that separate door because it costs money, okay? Keep that separate door there. It's just because you don't know how people are. We've got a world of people coming here from all kinds of countries. We don't know what kind of backgrounds they have. We have no idea. We don't know if they're mentally ill. Hey, listen, you know, the government doesn't house mentally ill anymore. What do? They put them on the streets. It's terrible. One thing also, as I said, a separate entrance, an egress if possible. Always put the tenant under lease with the provision that they have their own insurance for liability and contents. Very, very important to do that. And the reason for that is when we have a fire, okay, your insurance policy is going to respond, but we're going to turn around and we're going to go after that tenant. So what if that tenant was he was a family relative, okay, but a great kid with great aspirations. You want to help them. They're going into medical school. Now we're going to sue him personally. We're going after him because he happened to have, you know, maybe had a cigarette. Okay, terrible situation. Always make sure your tenants have insurance so that we can get your money, protect your clients. So often, I tell you, insurance companies will cancel you after a fire. If there is compelling reason not to, you have to make the business case. So a guy who is smoking, careless smoking, we almost always do that because it paints a lifestyle of substance abuse, alcohol consumption, you know, a guy obviously that is not the desired client. So all I can tell you is make sure that your tenants have insurance, you protect your principal, and you also protect your tenants if your tenants are your clients. Always try and get non-smokers if you can. Please try and get non-smokers. When you go to a rented house today, It's not enough. You guys have a bigger job. It's not enough just to walk in there and take a picture. We want you to take a front and rear picture of a rental, always. Any insurance company will want to see that. But we're looking also for updates on heating, electrical, plumbing systems. The age of the roof is important because it's a rating variable. So you say, well, I don't know where I'm going to get that. Well, you can walk in here. I'm sure there's a mechanical room somewhere. There's probably a tag on the water heater. There's probably something inside the grate will tell you when the furnace came in. These are important things because sometimes you don't know. You just don't know what you're getting until there's a loss. The product life cycle for a water tank today is about 17 years, 15 to 17. Enbridge, if you're going to a rental, will always replace them on your request. So you go in there, and how do you know? Very simple. You take a mirror, you slide it under the tank. If you see any brown spots, you know that it's going to go. It's just a question of when. So now, and this is a true story on another client we had. Fortunately, I didn't have the loss, but what had happened, the guy moved in. The day he moved in, all the boxes are downstairs, everything. They had this massive, massive tank. Nobody bothered to check. $3.5 million. Can you imagine? The agent didn't even bother checking. $3.5 million. And what happened? It flooded. All the boxes, everything, furniture, the whole bit flooded because nobody bothered to go in and check, right? Important. These are things that you can do. We talk about a lot in rentals because that's where we get a lot of our losses from. Another thing too is that, when advising your clients, sometimes, if they're going to do something, tell them to look at tankless water heaters. They're great. There's a maintenance cost, an annual maintenance cost anyways, but the beauty is that you got more space. It's clean, it's efficient, and it's the way to go. It's the way to go, right? I wanted to also just talk to you a little bit more about that survey. And, with high net worth individuals, we talk a lot about, what their points of view are and how they're feeling. So out of that statistical sample, which was about 700 people spread over the U.S. and Canada, they all said, 80% said that they're more optimistic now than ever about their financial future. So they're thinking positive. They're not thinking negative, okay? We internalize the stuff we get in the news every day. It's negative. I mean, there was a plane crash yesterday. Trump is putting on tariffs. I mean, some days in the morning, some days in the week, I don't even want to turn the radio on. I'm terrified. Their idea is to renovate their homes. A lot of them are renovating with the view of sustainability. The other day I saw on, I think it was the docu-channel or one of those, guys who had built a house as a firm based out of Minneapolis to stand 1,000 years. Go figure. 1,000 years. That was the program. I don't know what the cost of the house was. They showed it. It was beautiful. It was made out of concrete, everything, but it was built to withstand 1,000 years. So that was the prototype, and they're still producing this kind of housing. Just another thing on estate sales. Probably you guys want to know a bit about that. Don't show homes that aren't insured. You can find yourselves in trouble. You can get your broker in trouble. And also, as you know, many guys are putting clauses in the insurance contract saying the house has to be insurable. It gives them another way. It's just like financing, getting out of it. So, you can get insurance. Come to us. We'll be happy to help you. We'll give you a 3-month policy, 6 months if you need to sell the place, 9 months, 12. As you know, if you have what's the term I'm looking for? Probate, yes. Probate now runs about a year in Toronto. But if you have a client in London or North Bay or any of these small towns, you can get probate done in 6 weeks. It's fascinating. It's really, really good. So what we look at is, when did the guy die? Okay. Then what we look at is, when is the will probated? Then we say, how come there's no insurance? Because usually what happens when people die, policies get canceled, there's nobody there, the insurance company cancels once they find out. So we will give you that high-risk insurance. It's expensive. It's not cheap. And it's not as good as what you would have under your standard homeowners policy. But it's important because it satisfies the clause, is the property insurable? Yes, it is. So, the homes also, as you know, will sell quicker if they're insured. I want to tell you one little story quickly. Don't forget to leave your card. You good? All right, good. All right, duly noted. I want to tell you a story about an agent that went into a house and it wasn't insured. And so it was one of these houses that you walked upstairs and there was a door, like it built a door here, and you stepped out onto like a porch which stepped down to a roof. An agent put 1 foot on, that's fine. Second foot went straight down. And they never ended up working again in real estate. So, you know, if the place is in bad shape, you know, the best thing you can do for your client is to make sure they have insurance. I wanted to also talk to you a little bit about what we consider is an important thing in insurance. These houses that are vacant, and there's tons of them here, there's tons, okay? They have a 72-hour supervisory warranty in them. What that means is that somebody has to check on that property every 72 hours. So what you can tell your client is put a log in there, even if you have your neighbor going in there checking, okay? There are services that you can do that, or you as a realtor can do that as well. I mean, it takes up time, but you'll help your client if there is a flood, or if there's, because we will not pay if they can demonstrate the place has not been checked on. So very, very important. And the devil is in the details. A lot of people don't look into those contracts, but those contracts are exactly what they are. We will pay if you meet the following conditions. And one of those conditions is that 72-hour warranty inspection. Another thing too, to keep in mind, if your clients want to put a mortgage on a vacant property, it's a challenge. One of the reasons is that we won't give you the Standard Insurance Bureau of Canada mortgage clause, which exists in all insurance contracts except for high-risk insurance. And that contract means that we will pay them out because they hold a mortgage, okay? You can't get this stuff on vacant properties. It's a real challenge. That's why a lot of banks will step in and they'll come to you quickly and say, we've got this property. You know, they know that their interest is the only thing that's protected. They have to protect themselves should their clients turn around and come back at them later on, right? So we want to also just touch a little bit. Keep in mind too that the jury's out on this one for utilities, whether you should have them on or not. If you're showing a house, you want the utilities on. You shut off the water, then when you have to go, there's a showing, you have to do that. So the agent comes in, turns on the water, and he leaves, okay? And then it just happens to go very cold that night because somebody has decided to turn down the heat, and you have a burst pipe, okay? Whether you do that or not, I know it's up to you. That's why you have to have that inspection. I think that getting rid of the utilities is not a bad idea. Certainly keep the fridge on, but as far as water goes, you know, you're probably better just to shut it off and then turn it on as needed, right? Laneway houses and garden suites. Okay, so that's the new type of housing that we've got today, especially in Toronto. What we look at is two things. First is the homeowner or the proposed occupant. We have to establish whether it's a family relation that's going in there. And the key thing is there a rent transfer. So in other words, it's the guy paying rent. Okay, if he's paying rent, that's a tenancy. But we've decided to take mom and dad and we put them back in the garden suite, or we put them into the laneway house because we want them close by. Okay, we treat that differently. We treat that like a standard homeowner, as opposed to you putting in your client, Mr. Mendez, into that place where he is now a tenant, we treat that as a rented dwelling. So again, we got two types of insurances covering garden suites and rentals and laneway homes. Coach houses, keep in mind, aren't always updated, and the insurance company can turn around and deny insurance for not only the laneway house, but for your house as well. They can do that because there's a liability exposure on the two. So if your guy is thinking of converting that back garage into a laneway house or into a garden suite, make sure he spends the money on upgrading the wiring, the heating, the plumbing, the roofing, and deciding on how he's going to go about it, whether we put a family member in or whether we turn around and just use it for young professionals commuting downtown who like these kinds of dwellings. I always tell people to make sure that they look at the surveys when they're dealing, because when you start building, all these laneway houses and that were built right to the lot lines, and you got to be careful that you don't go over. Make sure everybody always has title insurance. I don't have to tell you about that. You guys are aware of that. I want to talk to you about just the 4 types of water that we're dealing with today. And certain policies will cover water and certain policies won't. We're dealing with overland water, groundwater, sewer backup, and water and sewer lines. That's the new one, water and sewer lines. You'll see firms trying to sell that stuff. A lot of good insurance companies will offer that because when the city is, as we remember from those floods we had in 2013 and last year, as they dig up and replace all that stuff, they're not replacing the lines to the house. They're doing their own infrastructure. Real problem, real problem. And you want to protect your clients, make sure that the place is not flooded by these types of water and finding out that there's no type of coverage available to them. Interesting, last year we had 4 major catastrophic losses. 2 in Ontario, the big flood, a big rainstorm. Calgary had the hailstorm, Quebec had a flood. Ontario had 2 floods within 6 weeks. Major rainstorms, if you remember them. So what do we do in those situations? Of course, we pay. But the bigger picture is that insurance rates are going to rise, or you're not going to be able to buy coverage, or you're not going to be able to get a deductible that you want. I have a client who is a major movie star, and she transferred from Hollywood. She lived out in Brentwood, which is just off where Mulholland Drive is. You've probably heard of that. Anyways, she was telling me that in her house policy, the fire deductible was $100,000 US. So the deductible in your home is probably $1,000, okay? Or maybe yours is $500 or $1,000. $100,000. Now, why? Because LA is that kind of area that, tends to fire. So the biggest fire loss in the history of the United States will find its way into our history. How? Because we're all going to be paying more for that. Because insurance companies buy insurance for those types of catastrophes. The fire in LA, fires out in BC, hailstorms in Calgary, this kind of stuff we buy insurance for. The companies that you are insured with buy insurance for that. And of course, little Hans in Munich, and it's going to be looking and said, what's going on in Canada? 4 catastrophic losses. Okay, up the rate, because their treaties come due in January. That's just an interesting thing. So you will see property rates go up. In Ontario, over $1 billion in insured damage from floods this past summer. $1 billion. It was the second costliest summer flooding in Ontario. In Quebec, Storm Debbie caused $2.7 billion of damage between August 9th and August 10th. British Columbia, an atmospheric river event from October 18th to 20th, resulted in $110 million in damages due to severe flooding along the southern coastline. It's getting to the point where you can't, and you're advising the client, buy on the water, your value will go up. Oh, you don't want to do that anymore. You got to really think about it because you're going to pay more in insurance. And we've had places where homes are just washed off. Maritimes, ask anybody in the Maritimes, all those homes that got washed off during the storms. Want to just go back and you know, when clients are talking, you know, and you've already made the deal, everything's good, you know, you have to be post-sale active. And here's some little things that you can always share with people. You know, don't pour oil and fats and grease down the drains. Clean your drains to eliminate possible blockage. Clean your eaves troughs. Extend your downspouts further out into the garden. You know, raise large appliances and furnaces and hot water heaters, electrical, oil tanks above any anticipated flood level. So now in the basement today, people you'll see are putting wooden pallets for storage. Why? Because, does everybody here own a moisture meter? Oh, you should have them. You should have them, because when you go into a house today, you want to turn around and put something on a wall. You want to find out if we got a history of water here. Wow, this basement looks great. It's all been painted. Wonderful. But always check. Always check. A moisture meter will help you. Okay? Nobody's going to necessarily disclose that there was a flood, even though, you know, we're dealing with agents of different integrity, and nobody's going to, and I know people lie to me all the time. Day in and day out, I'm used to it. I think almost we start off on the basis that you're going to lie to me. Okay, finally, I got a laugh out of this group. Oh my God, this is amazing. But it's just a fact of life that, you know, you want to protect your client selling them, because remember, poor clients are of little value to anybody. We want to prosper as our clients prosper, not at their expense. So if you put them into a house that they can't sell down the road, not only have you got a problem, they've got a problem. If they got a problem, they're going to try and find a solution. They'll find a solution with somebody else, because insurance doesn't pay for everything. People think, oh, I got an insurance claim. You know, I see my holidays down and doing the mambo and doing the cha-cha-cha because the insurance company is fixing my house. Well, not always. A lot of times we say no to a lot of stuff too, right? So keep that in mind. I wanted to just also mention quickly two other things, and then we can throw it open to questions if there are any. The City of Toronto, which most of you work in, I think, has a grant program in place for, and you're all aware of this, I'm sure, but I'll share it with you, for backflow valves and also for sump pumps. So we pay, i.e. the city, and the site you go to is City of Toronto Grants, Incentives, and Rebates page. And there's an actual site. Basically, you go in the search bar, you enter water. The specific grant is called Basement Flooding Protection Subsidy Program. Then you go to the grants page and then you apply, okay? Very straightforward application. You go to the site, but you can share that with your clients, okay? If they're going to do some renos and they're in an area, and we know some streets here in Etobicoke are lousy. Thompson Avenue, Perry Avenue. I mean, there's rivers running underneath these places, okay? And they create problems for you. I won't go too much on that because I don't know how much time Mr. Mendez is going to give me this morning. But I wanted to talk to you a little bit also about the standard unit definition for condos. So is everybody familiar with that is? No? Okay, so you have a condo, and each condo is incorporated once they're registered. Okay, you know, they've got their own number and that. And then they have what's called the standard definition unit. So whatever that encompasses, if that corporation decides that we're going to cover all the built-in shelving, okay, that's part of the standard definition. If they say they're going to cover the carpeting, why they would do that, I don't know, because they're not doing it anymore. But if they decide to do that, that's part of the definition. So familiarizing yourself with this is really, really important too. Why? Because a lot of people rent condos out, and they think everything's covered by the condo corp, so the unit owner doesn't buy anything. And that's where you have the problems. I'll tell you about this one claim I had recently, and you're going to die laughing. Okay. So my client is a European. Mom dies. She inherits the property. She rents it out. But she rents it out to a guy who likes fish. So he has this massive, massive thing, about the size of that, I guess. And it's a fish tank. So you go and you have a coffee, you like that. You go and you have dinner with your spouse, you like that. This guy likes fish. So he likes fish. But how does he clean the tank? Of course, he cleans the tank in the shower. Pumps some water, the sand, the grit, all down every week.
Oh, no.
Oh, yes, it gets better. So one day he decides they go in, they're showering away, and the water comes and went through 4 floors. 4 floors. There's a place down here on the waterfront. I won't tell you which one it is. 4 floors. Anyways, my client, borderline stupid, doesn't turf the tenant out. You can't turn the tenant out because they have a fish tank, can you? You can't do that, right? It's impossible. Good afternoon, Mr. Allen. Good afternoon. Thank you for joining. Just put your card up on the table here. Who knows? We're talking about the standard definition available. And I got this from a lawyer, and I want to share this with you. The bare bones form of standard unit definition limits what is standard to, more or less, just the essential structural components of the property. Okay? Such components would usually include walls and ceilings, okay, to drywall. But if you go to Liberty Village, hey, they don't even have drywall. They don't have drywall. Without including paint, wallpaper, or plaster finishes, okay? Stairways and floor assemblies up to the subfloor, without including floor coverings of any kind and basic electrical, plumbing, and HVAC components. Possibly excluding certain major optional or variable items such as the furnace or air conditioning units and apparent equipment. The exact contents of the definition will differ from condominium to condominium. So now you are working on this particular unit, and you happen to know the property manager and you've had a chance to take a look at this. But now you go over to another guy who's not part of that chain, that development. Well, guess what? They have their own definition of what a standard unit is. I think of the changeover in Palace Pier. So Palace Pier, as you know, was one of the first successful condos built in Etobicoke. It's 50 years now, at least. It's got to be at least 50 years old. So they have to replace the piping, okay? Because the materials they were using at that time are no good. But they had so many floods, they just took flooring out 100%. So it doesn't matter whether you have your original flooring or upgraded flooring, they're not going to do anything with it. Nothing. It's excluded. You have to have insurance. So what do? We cover you with that under units, improvements, and betterments, okay? Very, very important to know. So if your clients are spending the money, and people spend money on condos. Oh, I got one guy in Palace Pier, and I guess he's got 2 units maybe, but he's got marble throughout the entire place, solid marble. I'm going like, am I insuring this? He says, oh, it's not going to burn. I said, oh, it's not going to burn. Okay, good to know. I said, what if it collapses? Oh, Anyways, I just tell you, people spend a lot of money on condos today because it's become one of the preferred lifestyle living arrangements in Canada. Remember, we all grew up and your standard home was your single detached bungalow, and everybody started out with a townhouse. After they went from a townhouse, you put them into a bungalow. From a bungalow, you went them into a 2-story. And from a 2-story, you turned around after the family has fled back down to a bungalow. And after you leave the bungalow, they went to a condo, because now there's condos everywhere. Why? Because I can't do steps anymore. And after that, they go to retirement homes, and there's assisted living. And now you don't have to do that, Dad. We're going to put you back in our garden suite in the backyard. So they're back to where they started again. It's interesting. It's just the changes of how things are. Keep in mind, each condominium corporation is different. But in essence, all finishing items, fixtures, and other unit components that are usually regarded as discretionary, or whether the unit typically makes a decision as to the quality of the item to be kept in the unit, are defined as improvements, okay? And that's the big one here. Your client is spending money. Make sure that their insurance company knows about it, okay? Very, very, very important. I wanted to just touch base with you on one other thing, and for what it's worth, today the takeaway really is to get involved. Keep in mind those characteristics of high net worth, because they're the ones that are helping us thrive through these difficult times. And out of these difficult times, there's tremendous opportunities available. We're always available for you as a resource, and some of you we've worked with and over the years, and we're happy to call for a consultancy. We don't charge for that, and if you're not sure about something, you always call. We'll get back to you as long as you say, "Well, I'm Tom from Jim's office," or what. We'll always get back to you. And we do this with other real estate companies too, Sutton, Remax, other real. Now I'm doing one, I think, for Remax down on Jutland, and everybody's problems are the same, but they're not problems. We can work through these things, but your client has to get on board, and you have to educate your client that if they, especially in rentals and estate homes, okay, the role of the executor. Remember, the executor can get 2.5% of liquid asset and 2.5% of real property, okay? So they're not doing this out of the love of their hearts, okay? But with that, our expenditures, such as insurance, such as home inspections, such as, painting and that kind of thing to get the house in a saleable condition, all right? If you remind them that it's all deductible, it's no skin off their nose, and they see it, maybe I'm wasting money, oh my God. I'll just tell you a story quickly of a rental we just did downtown. And anyways, what happened was the lady died. Property is down near Grayson College area. Beautiful home, stunning home, fabulous. The lady was in there. The executor, the heirs said, "We want you out." But she was the executor, so she had to get out. She had to get out of the property. And it had been vacant for over a year. They couldn't sell the property. This was last year. Could anybody sell anything last year? No, nobody could sell anything. So what happened? They fired the agent, got rid of the agent. They let it sit. When they came to try and sell it, the agent, smart agent that was coming up said, "Is it insured?" Said, "No." "Well, we're not going to do it. We're not going to take it at all." What happened in the long and short of it is that we got her insured. It costs tons of money because the longer it's vacant, the more, and we're not going to go forever. Usually 2.5 years. Give me a reason to stay on risk, the insurance company says to us. Give me a reason to stay on risk. Why? So that's why it's important, you get your clients ready and to hit the ground because the property's got to sell. Okay, we have a housing crisis in this city, and people are holding on to properties forever and ever and ever and not selling them. It's doing our youth a disadvantage. And never mind the people that are coming in here to invest. Put them aside. It's about our people, our young people. And your job, of course, is to make sure there's an available amount of housing stock so that people can continue to enjoy those dreams. So I'm going to cut it short here. But if you have any questions, I'll take them now. Wow. Tough crowd here, Mr. Mendez. I don't know. Anybody online? Oh my God, they've already died. They've died online. I can do it. Okay, put your card up there. Okay, so I've got 1, 2, 3, 4. I got 1, 2, 3. Oh, if I got what do we see how would I know if there's a question there? There's not even one. Hello.
You have a card?
Hello, do you have a question?
Then you better go. You never know. You may
Get 2.5 and 2.5 or something.
That's correct.
Repeat that?
Yes. A lot of times you'll see the role of the executor. You can get 2.5 on liquid assets for under administration and 2.5 for real estate under administration. Okay, that's kind of the max tier.
Like if they sell it, you mean?
Yeah. So in other words, I'm the executor. All right. I can charge if I've procured the agent, prepared the home, gotten probate, done that. I have a right to charge against the estate a fee for doing all this. And it could be as high as 2.5%.
And this is upon selling the property?
Selling the property, yes. Well, disposition, right? And don't forget, after that, you still have your taxes to be paid too, right?
Yes. Okay.
Okay, but yes, the role of the executor is important. It's a role that most people don't want because it's thankless. If you leave it up to the trustee will run the asset down. They don't care. Their job is to get rid of it right away. The bank, they're only interested in their property. I deal with an estate office with TD downtown, and we're constantly running up against cases where, the family don't want anything to do with it. They don't want anything to do with the asset. They just want to get cashed out. As this discussion I was telling you about the girl downtown, the heirs kicked her out of the house because they felt that the house would sell faster if there was nobody in the house. Yet she was the executor, so go figure that one. Anyways, everybody's different.
What was the result of that example?
Well, it should be property should be coming out at the end of February. The last time we insured it so that they could turn around and get it listed. So you'll see it probably released in February. But yes, she's still the executor. And they weren't able to sell the property last year. But my point of mentioning this was strictly to deal with the period of vacancy. That you think, wow, we've got probate, we're going to sell it tomorrow. It doesn't happen that way. And I just gave you an example of what can happen.
So in other words, you're saying that they tried to list it last year, but it wasn't insured, so they couldn't sell it?
That's correct. No, not because it wasn't insured. They couldn't sell it because the market conditions did not. And they turned down. They had in their mind, as most sellers do, they have a value in their mind of what the property is worth. Okay? And it didn't meet that target, so nothing happened. And the house got without insurance, was left without insurance, left without an executor living in there, and it created all kinds of problems. But it's coming back up on the market, and it's a great place if you have 1.7 handy. I think it's 1.7. I think it's 1.7 they're looking for, 1.7 and 1.8.
Do it at 1.3.
That strategy may work. I don't know how it is downtown. Anyways, Mr. Mendez.
I just renewed the home insurance, and they were saying that back up that new that new portion of insurance for backups and whatnot.
Right.
They said that the maximum limit is 150,000. Do you think that will be even enough?
Okay, so you've got 150,000 because of where you live. I have 75,000 in my house for where I live. Somebody else may have 100% of the value of the house. A lot of it is based on floodplains. I didn't know if you want to get into this discussion or not, but floodplains are mapped out all across the country. So we know, and I'll give the classic example of floodplain is Eglinton Flats.
Springbrook Gardens.
Oh, there you go. Springbrook Gardens, another one. Exactly. So floodplains will determine also whether you can even buy insurance, because there's places like Windsor in Ontario or the Red River Valley in Manitoba, you couldn't buy sewer backup, anything, any water coverage at all, because they're a nightmare. They're a total nightmare. They flood every spring. Look at that Indian family that Indian tribe up in northern Quebec. Every year they get flooded out. Every year we fly them into a place for 3 months until everything starts over again. Water is our number one peril right now. It's one of the worst ones. A thing that you could think about too, when you're talking to clients, especially if you're selling properties where the client is buying up north, put in non-combustible vegetation. I know you're saying, well, what does that do? But all those people out in Los Angeles lost their homes because all their vegetation lit up and set fire, okay? And the embers traveled, okay? So I only tell you that as a good thing, and I'll tell you how we treat this stuff. So when we have a fire in Northern Ontario, as we do every year, we got all kinds of them, we put a moratorium on insurance. You don't hear about it, but basically what we say is we're not insuring any property within 50 kilometers of that fire because we know that's going to spread. We will not increase your insurance during that fire period. We will not, because we're afraid that we're going to lose money. So that actually happens. So that's one of the things that you have to consider. But you only got 150,000. what you can do is you can find out, A, whether you have a backflow valve or whether you have a what do you call it, sump pump. And it should be battery operated, by the way. It should have a battery backup. Make sure that you have that, because when you have a flood and the power goes out, what happens to the sump pump? It comes up. That's it. It's done. So having a battery backup is really important. Can you get more of that? Well, it depends on how much it costs to do a basement today. I don't know what the standard cost is to do a basement. What is it? 80,000, 80, 60 plus, right?
More by the time they start.
Yeah, and you know, with those guys, they come in, they see a drop of water, and they cut up 2 feet automatically all the way around. Doesn't matter. It's a business. It's not a charity, so it's a business. They cut up 2 feet. So now your rec room, the one that, you know, you had the beautiful paneling, the stereo all set up, is all wrecked because these guys come in and they take everything out. He said, well, there might be mold. Well, you know, mold is relative. You know, if it's been there for years, yeah. You have a flood and you get to it early? Not necessarily. So I'm not always a big favor of tearing out the basement. I really think that you can treat it other ways too. You got mold in your bathroom, get some bleach and some elbow grease. What is that? Elbow grease? No, what do we call that?
You get a roll.
Yeah. I wanted to also tell you that, you know, we're happy to meet with your clients, you know, and your clients are protected. Just because we deal with realtors all over the province doesn't mean, you know, your clients are protected. They're your clients. Nobody shares. Nobody has access to the files. Nothing like that. And everything is in confidence. Because I know how important it is. You know, loose lips sink ships. And how many times have you had a deal and at the very last minute, you know, you've got both the buyer and the seller in agreement. The financing's on. Everybody's ready for the financing. The parents are coming through with the money. And then it's the insurance guy who shits on everybody. Pardon my language, okay? That has happened many times because they said, whoa, you know, you can't do this or you can't do that or you've got to do this. And, you know, classic example is, you know, you go in, you find out knob and tube wiring. It's a nightmare for you guys. It's a nightmare for us. Fortunately, most of it is gone. But some of these older buildings that haven't been renovated down around Spadina and that, you'll still see some of it. We typically try and stay away from it. An investment in wiring is a good investment, but you have those old Kingsway homes. So what we're telling people is, okay, keep them in the plaster, trip the wires, okay, clip them like that. So now you don't have to touch that, but you still got to put new wiring in the house, right? So you got 3,500 square feet. Now you're going to put new wiring in a house like that. Very hard. Yeah. Snake through plaster is hard though. Okay, I think yep, go ahead.
35 Ormskirk. It's a very famous. That's a condo. Jane and South Kingsway.
I know this. I know the area. Yeah.
15 years ago, the underground parking collapsed completely.
Yeah. I wouldn't be surprised.
That's happening to a lot of older condos now.
Sure it is.
You look at Millgate Manor, or not Millgate Manor, Mill Road, the Masters.
Yeah, there's another example.
Old plaster, old concrete.
And people will die to get in those buildings because